In 1997, Bre-X Minerals was worth $6 billion, built on a gold mine that didn't actually exist. In 1997, a small Canadian mining company called Bre-X Minerals was worth $6 billion. It was a Wall Street darling, built on the claim that they had discovered the largest gold deposit in human history, hidden deep in the jungles of Borneo. Thousands of everyday investors, pension funds, and major financial institutions poured their life savings into the stock, believing they were getting in on the find of a lifetime. But the gold didn't exist. The entire company was a fiction. To understand how a penny stock becomes a $6 billion giant, we have to go back to 1989. David Walsh, a bankrupt former stockbroker from Calgary, Alberta, founded Bre-X as a subsidiary of Brizia Resources. For years, the company was essentially a shell, a penny stock with no significant assets that consistently lost money. That changed in March 1993, when Bre-X bought a property near the Busang River in East Kalimantan, Indonesia. Walsh hired Michael de Guzman, a Filipino geologist, to lead the exploration. Initially, the project was a failure. Early tests showed no gold. By December 1993, the company's license for the land was days away from expiring. Then, de Guzman told Walsh he had found the exact spot they needed to drill. He claimed the location had come to him in a dream. By May 1995, the drilling at Busang II began producing spectacular results. The first estimate was 2 million troy ounces of gold. A troy ounce is the standard unit of measurement for precious metals. But the numbers didn't stop growing. By later that year, the estimate jumped to 30 million ounces. In 1996, it hit 60 million. By 1997, it reached 70 million ounces. Some internal estimates suggested the potential for 200 million ounces. If true, Bre-X would have controlled roughly 8% of the entire world's gold supply. The market went into a frenzy. The stock price rocketed from under $1 to a peak of over 280 Canadian dollars per share. The hype was so intense that it drew in the highest levels of power. Indonesian President Suharto, known for the crony capitalism of his regime, demanded a stake in the project. Major mining giants like Barrick Gold and Placer Dome competed to partner with Bre-X. Eventually, Freeport-McMoRan was selected as the mining partner. This deal was announced February 17, 1997, and Freeport began its due diligence, the process of auditing a company's claims before finalizing a deal. But as Freeport's experts began their own independent testing, the fantasy collapsed. The results were devastating. They found virtually no gold. The investigation revealed a mechanism of fraud known as salting. Salting is a confidence trick where a fraudster adds actual gold to ore samples to make a site appear rich in minerals. Independent consultants from Strathcona Mineral Services found that the samples had been systematically tampered with on a massive scale. The gold hadn't been found in the rock, it had been added to the core samples before they were sent to the lab. The fraud was so brazen that the gold appeared to be rounded alluvial gold, likely shaved from jewelry or sourced from rivers, rather than the primary lode gold found in deep rock. This simple trick had fooled multiple independent laboratories and the world's top analysts for 4 years. As the truth began to leak, the mastermind vanished. On March 19, 1997, Michael de Guzman fell, or was pushed, from a helicopter over the Indonesian jungle. His body was found days later, badly decomposed. While the official ruling was suicide, the circumstances remained mysterious. The man who knew where the bodies were buried, or in this case, where the gold wasn't, was gone. In May 1997, the public announcement of the fraud hit. Bre-X stock collapsed to zero almost overnight. $6 billion in shareholder value evaporated. Retail investors who had mortgaged their homes and pension funds that had bet on the discovery were wiped out. Approximately 40,000 investors lost everything. The aftermath was a legal vacuum. David Walsh, the founder, denied any knowledge of the fraud. He moved to the Bahamas and died of a brain aneurysm in 1998 at age 52, reportedly leaving behind millions from stock sales he made befove the collapse. John Felderhof, the VP of Exploration, was the only person ever charged. After an 8-year trial, one of the longest in Canadian history, he was acquitted in 2007. The judge ruled the prosecution failed to prove Felderhof knew the samples were falsified. Bre-X left a permanent scar on the financial world. It fundamentally changed how the mining industry operates. Canada introduced National Instrument 43101, a set of rigorous standards requiring independent verification of mineral results by qualified persons. It served as a brutal lesson in the world of speculative investing. Extraordinary claims require extraordinary verification. Because for the investors of Bre-X, the gold rush ended not with a fortune, but with a body in the jungle and a $6 billion hole in the market.